Today, Solana plummets after the second network outage in a month. The Winklevoss twins announced job cuts for their crypto exchange and blame it on the crypto winter. And Valkyrie's Steve McClurg says stablecoins could be a safe haven during this downturn. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are in the red yet again, but off the lows earlier in the morning. Bitcoin was trading right around $30,000 by noon Eastern, and Ether traded just a little above $1,800. And then there's Solana, which is worth about $40, but that's off the overnight lows when the cryptocurrency fell as much as 12% in 24 hours thanks to an outage. Let's talk about the top stories, and the first one is actually about that outage, which halted transactions and disrupted apps on the Solana network. That includes the numerous NFT and DeFi ecosystems running on the platform. The Solana Status Twitter account instructed validators to restart their systems, which brought the network back online. It's the second outage on the network in a month, and that same Solana Status Twitter account reported that this one lasted for more than 4 hours. Next, the Department of Justice just charged someone with insider trading of NFTs, a first for the agency. Nathaniel Chastain, a former product manager for OpenSea, was in charge of picking the NFTs that would be featured on the marketplace's homepage, a spotlight that typically skyrocketed the token's value. Chastain allegedly purchased dozens of NFTs before they were featured on the homepage, then sold them for 2 to 5 times more once they were featured. The DOJ charged Chastain with 1 count of wire fraud and 1 count of money laundering, and he could face up to 20 years in prison for each. And finally, the crypto crash has forced crypto exchange Gemini to cut jobs. In a blog post, co-founders Cameron and Tyler Winklevoss announced the company would be slashing 10% of its staff as trading volume of crypto has fallen. The Winklevoss twins also said that the industry is facing a crypto winter, coupled with global economic pressures. For our main story, I spoke to Steve McClurg, Chief Investment Officer of Valkyrie Investments, about that crypto winter and what he expects from the market in June and for the second half of 2022. It's June now. We started a new trading month this week. It's been kind of a painful year for investors in all risk assets, but looking back on the past few months, what do you make of the bearishness of the market, particularly in crypto?
A few months ago, we were talking about how, the actions of the Fed probably cause all risk assets to go down. And they actually have. And it doesn't look like the Fed is going to let up anytime soon. They have a mandate to continue to fight inflation. And inflation is extremely high right now. The CPI prints are in the 8% text mark right now. And real inflation is probably much higher. So the Fed is going to continue to raise rates, and they've actually stated that they would raise rates despite the fact that markets could go down and will go down. So not only have markets gone down, we expect the markets to go down even further. And when we're specifically talking about crypto assets, all the crypto markets could go down another 30% as well. So we could see Ethereum down to 1,400. We could see Bitcoin at 22,000. Which tells me that markets will continue to go down and that they were probably a little bit overinflated anyway. Bitcoin, I think, even though Bitcoin could go down to 22,000, it's still a great buying opportunity here if you're slowly moving in and dollar costing into Bitcoin. We also are looking at Ethereum. There could be issues with Ethereum and the crossover from proof of work to proof of stake, and we're very cautious about that and watching it very closely. But despite the fact that Ethereum could go down further from here, again, we don't try to time markets. We try to look for value, and as long as there's value, we will slowly move into that value.
Give me a timeline for all this. You just said that crypto prices could go down even further. What do you see specifically happening for the second half of the year? Do you have an idea of when we start to reverse and go back up?
Well, typically markets do, go flat during the summer, and this summer is going to be no different. There's a reason for the old adage, sell in May and go away. We expect that, all markets will just slowly melt throughout the summer, and sometime probably in September or October is when we could see markets start ticking back up again. Our expectation is that the Fed will continue to increase rates by 50 basis points in both the June and July meetings. And then in the September meeting, because there's not an August FOMC meeting, we will either see them pause ahead of midterm elections or have to reverse course if the markets have shrunk enough. I don't expect them to reverse course. And by the way, the September call could happen in October as well. But likely, if there's enough pain ahead of midterms, we will see a little bit of pressure on the Fed to hold off for a period of time.
So where can investors find some safety in a period like this, particularly among crypto assets?
Yeah, among crypto assets, we're probably looking at just stable coins. And by the way, not algorithmic stable coins that don't have a one-to-one backing of assets like cash. So we're seeing a lot of people move into stable coins like the Gemini token or USDC and slowly earning some yield in some safer platforms at the moment. A lot of buyers, though, and fund managers are buying at these levels, though. Even though we expect markets to go down further, you typically don't want to try to time the bottom. So if you're seeing value in a certain crypto asset, legging in at this period of time isn't entirely bad if you've been on the sidelines, which we have been.
What should investors be looking for when comparing one stablecoin to another? What exactly are they shopping for when they decide to put money into one stablecoin versus another?
For other stablecoins like the Gemini token or USDC, what makes those favorable is that they have a one-to-one relationship with dollars in the bank. And so anytime that you want to redeem, you can get your dollars out and you can stake that or lend it out, much like you would with repo, reverse repo, and earn a yield back. And that yield is considerably higher than, say, US Treasuries. The problem with moving into US Treasuries or high quality bonds at the moment is, as you've seen from the last 6 months or a little bit less than that, since October, treasuries and other bonds have lost a lot of their value as far as price goes. So if you're holding bonds, yeah, you might get a little bit of yield, a little bit of safety, but the price has gone down. For instance, 30-year bonds have been down 30%, and that's 30-year US Treasuries as far as price goes. And if the Fed continues to raise rates and yields continue to go up, then that means prices for bonds will continue to go down. So you might have a little bit of yield, a little bit of safety, but you lose principal. In holding stable coins, you're essentially holding cash or something that represents cash and earning a yield on that protects you.
A quick reminder that you can find that full interview over at cnbc.com/cryptoworld. With that, you're all caught up for today, but we'll be back again tomorrow. We'll see you then.